Hello, welcome to this week's How's the Market, Pensacola. Well, it's inauguration week, and I'm absolutely not going to talk about that. It is so politically charged right now, our entire country, that I have just vowed I'm not even going to talk about politics on this particular show. I want to talk about real estate mortgages, how it impacts us here in the area. So I try and go with a macro level and to give you guys some macro news, and then take it down to a micro level, our two counties here in our area, so you get an idea of what the market looks like here and how you can make decisions for you and yours. Well, the biggest macro news last week was that the T-bonds jumped up, the 10-year Treasury jumped up to 1.18%. That also showed that mortgage rates rose. They kind of have to. Those two work I forget the word, tandem, I don't know. Anyways, they work together, congruently. That's the word I'm looking for. They work congruently. If T-rates or T-bonds, a 10-year Treasury note, actually goes up, mortgage rates have to, because there are people out there that invest money, and T-notes are considered the 10-year Treasury note is considered one of the most secure and safe investments, giving you some type of rate of return. Right above that winds up being mortgage-backed securities. Those are still considered pretty safe. I know some of us have that knee-jerk reaction talking about, well, did we learn our lesson from 2008? What do you mean they're safe? Well, if you look at what they look like now based on what they looked like in 2007, they actually are pretty safe. But they do not have the full backing of the United States government. So if they don't, that means that they have to offer an investor a slightly higher return in order to be able to compete. So as Treasury notes go up, mortgage rates have to go up at the same time in order to be able to give the investor the extra rate of return for the extra risk they are taking. Because if we offer the same thing as a 10-year Treasury note, well, why wouldn't I just go buy a 10-year Treasury note? What does all that mean for us? Well, it means that mortgage rates could rise this year. We've been talking about that a little bit for a while. So as a buyer, there's a lot of buyers trying to jump in right now. We are, it's the middle of January now, so we're in our area, we're in our spring buying season. And I know there's a ton of buyers out there looking right now. They're wanting to take advantage of this. I also have a couple of people looking at refinancing, stuff of that nature, to just lock this in. Now would actually be a good time to do that, because there's no economic data that says the Treasury note's going to drop back down, which means mortgage rates are probably going to start to climb. Now, are we still ridiculously low? Yes. 30-year average was like 2.65 as opposed to 2.45, right? But a year ago, we were in the threes. Are we still ridiculously low? Absolutely. Are they on the rise? Yes. So is there a time frame that you need to take advantage of what you're trying to do? Yeah, there is. So pay attention to that. I'll try and bring some more of that on these shows as we go. I'll keep an eye on that for everybody. And if you have any questions, reach out, let me know. But that's the macro level. Now let's go talk about our two counties and this ridiculously low inventory still. This is crazy. Let's go. All right, for those of you who have never seen the show, I always start off with this slide right here. It says if we have between 6 and 7 months worth of inventory, we have what's called a neutral market. Anything greater than 7 months is considered a buyer's market. Anything less than 6 months considered a seller's market. What the slide does not say. Anything greater than 9 months considered a hyper buyer's market. Anything less than 3 months considered a hyper seller's market. Let's take a look at our two counties here to see where we are. And we're starting off in Escambia County, and looks like it's the same as last week. Same as the last few weeks. Over here on the left is your list price. Over on the right is your estimated months. It's color-coded to make sure that I show, based on this slide right here, what I'm talking about. That's why I always start with that slide, so people understand that good baseline. Everything up to $700,000 is a hyper seller's market. There is nothing. And if you look, there's only 453 properties active total. Total, all price points. Everything from lots, the $0 to $50,000 lot range, to multi-million-dollar properties. I got a multi-million-dollar property coming on here in a couple of weeks. All right, so I'll be adding to this inventory down here. The ultra luxury, 700,000 plus. Some of that would be considered luxury, but some of it's ultra luxury, like 3-4 million, 5 million, 6 million in our area. There's 4.8 months worth of inventory there, so there is still an appetite. We're still seeing people move here, and they like those luxury properties, but it's not as strong as the rest of the county. The rest of the county is just ridiculously low. And like I've said the last few weeks, I do not like this 100 to 250 being under a month's inventory. I just don't. If you look at those three price points, what is that? 84, 150 properties total. Like, that's it. If you between 100 and 250, there's 150 active properties total. Well, that's your first time home buyer. 50 to 100, we've actually seen an uptick. There's now 30 properties there. Some of this is damaged properties from Sally. So I've seen some of that. And that's why I think that some of these rehab loans are going to come out even stronger this year than they did last. But some of this from Hurricane Sally is damaged homes. So people have taken the insurance money, decided instead of fixing it, they were just going to wind up selling it. You've got investors, wholesalers. I know I've got a couple under contract myself that are that way. Because we'll just go in and fix them up, then turn around and sell them. But there's some people that need to sell, need a place to live, need to move. They've taken the insurance money. They need to do something different in their world. And so they've come on the market. So I've seen an uptick here, but a lot of these properties you're not going to be able to move into. And you can notice, here's how I know when you start looking at these data points. And I don't go over this on every show, but I want you to see it. I do go over it if I'm talking to a seller or a buyer. One of the ways I know that some of these are damaged is because the list to sale ratio. If you look at the list to sale ratio for most price points, it's 98 to 100%. The 200 to 250, look at that, 100%. 100%. But you come down here to that 50 to 100, it's 92 to 95% of list. Now, what does that say? It says that they're getting slightly under list, which probably means condition of the property is what's driving that. Have I seen some foreclosures pop up in that price point? Yes, I have. Have I seen a bunch of them? No, I have not. Do I anticipate seeing a bunch of them? No, I do not. There's too many people that have too much equity. And to be honest, if you're behind on a mortgage, or if you are on your forbearance and that's coming to an end and you don't think you can do something, I would be remiss not to talk to you and tell you, hey, you probably have more equity in your property than you think. Let me say that again. If you are in a forbearance and you are coming out of it and you need to sell, you probably have more equity than you think. So don't, by any means, let a foreclosure happen. Now, I'm speaking from experience. I've had one. For those of you who do not know my story, I owned a mortgage company in 2008 when mortgages, well, they kind of died, right? I owned a mortgage company. I lost my home. I lost investment properties. These were things that I had to do. So speaking from experience, do not let a foreclosure happen, especially if you have a lot more equity than you think you do. And even if you don't, you say, hey, Shane, I know that you're talking to some people and they have equity. I don't. I really am upside down. Talk to me. Because there's a huge difference between a foreclosure and a short sale. Huge. So anyways, that is Escambia County. Let's get over to Santa Rosa County and see what's what. And it's the same thing. 700, everything, every price point is a hyper sellers. Every price point in Santa Rosa County. And if you look, there's only 262 properties. 262 properties active. Same thing at this 50 to 100,000 mark. There's not much inventory. It's 0.6, but look at your list to sell ratio, 91 and 95%. This is how you read the data. This is how you take and interpret the data that I put out every week. All right, if you see 91 and 95%, that means there are probably some damaged properties selling at that price point. They're selling at a discount. I mean, I'll give you, for instance, I have a property right now. It's under contract for 130 something. It's either 130 or 140 something, right? But it was completely flooded. I mean, there's not a kitchen. It's just walls. The entire house has got 4 foot of sheetrock cut all the way out. Nothing. It's a shell. It's absolutely a shell. But it's under contract. I'm going to pay 130, 140 because I can drop 50, 60, $70,000 into it and sell it for 200 and something easy. Okay? So I know that I can make that happen. But yeah, that's why these price points, you do not see much. And this is kind of funny. I don't see this often, But look at this, 100 to 150, the list to sell ratio is 99 to 101%. So here's data proven. When I tell buyers, you're not going to come in at 85% of a property that's just been on the market 2 days. You're not going to get it. And a lot of times, you're not going to get it if you come in at full. And I'll give you an example. I had a property, I had a client that come in, what was it? It was right before Hurricane Sally, because poor lady closed the day before Sally hit, we closed. They come in, had everything but a brand new roof, right? Gorgeous house. And they were asking $255,000. And she walked in, she loved the place. She said, I'll give them the $255,000. I said, and you won't get it. I seen the amount of cards on the table. I knew that would happen. She said, what are we going to have to do to get it? I said, well, I can't tell you how far over to go, but I just know you offer them full. Even though it was cash, you won't get it. Somebody will outbid you on this because the house inside is practically brand new. Had a pool. It was out towards, it was only 2 minutes from the beach. It was great, right? So she come in. Remember, they were asking $255,000. She offered $292,000 cash from a $255,000 offer. $292,000 is what she offered. We won, and it would have been unethical for the agent to tell me what the other bids were until we closed. But I knew that. The other agent knew it. So I told him, I said, listen, when we close, I'm asking you. She said, okay. Once we close, I'll tell you. And we did. We closed at $292,000, day of Sally. I'll tell you how that story went here in just a second. But I asked the other agent what the other bids were. And she said, you won this by $1,000, which means somebody else came in at $291,000 cash. Remember, they were asking $255,000, $291,000 cash, and didn't get it. Now, I know that my client would have been mad at $292,000 and she didn't get it and lost it by $1,000. Now, it was out towards Perdido. It did get damaged. The one thing that she was not able to get out of the deal was a new roof, but she did have it insured. So now she's got a brand new roof with a deductible. So now the inside, the new hurricane actually did her quite well when it come to this particular one. It did damage the roof a little bit, but she got all brand new roof, everything else. She's happy as a lark right now. But that just goes to show you, not everything is going to have to be $40,000 over. Not everything's going to have to be that way. But if you're coming in thinking you're going to win at $40,000 under, or if a house is in really good shape and you're going to be able to offer 15% off, you're not going to get it. You're wasting your time, and you're going to experience a ton of frustration. And this market right now is that way. Now, will it always be this way? No. You can go back and look at my show 2 years ago, and you can see that even in Santa Rosa County, we had some buyer's markets and hyper buyer's markets where you could offer 10% under and possibly get it, or 15% under. All right. But all these courses and things teaching you that you can offer this or that you should go out and do that, it's just not going to work. Not in this market. Not right now. Not at this particular time. The strategies have to change based on market conditions. That's where we're at right now. That's why I put out this show, because I want to show you market conditions as we speak right now. And so as we speak right now, everything is a hyper seller's market. All right, there's only one section, and that's in Escambia County, where it's not a hyper sellers, and that's the luxury. But even that's a seller's market. And that's selling, look, 97 to 100% of ask. Now, 3% off a $4 million deal is a few $1,000s. All right, that's a bit. But still, it's still selling 97 to 100% of list price in those price points. All right, that's this week. Again, inauguration week, we got a bunch of stuff. There's an economic calendar it's pretty packed this week. When I listen to Jamie Dimon, for those of you who don't know who Jamie Dimon is the CEO of JP Morgan Chase. When I listen to him talk about as the properties are coming out of that forbearance section with Chase, they're not seeing a huge foreclosure. I don't think we're going to see that. I think there's some economic data that's going to come out this week. And then, there's all kinds of things happening this week. But for our numbers, for our areas, as the snapshot for this week looks, here's the market. Here's the market. So there's the market, Pensacola. Thanks for watching. Have a great week. I'm a man on a mission. My mission is to help people break through all the noise out there and don't need no permission. I want to help you get to actual truth. Don't you just want the truth?